discussion, could I invite our next moderator, Charlotte Yang, to join me upstage from Bloomberg. And she will help us to actually introduce the rest of her fellow panelists who will offer a variety of trading opportunities in the Asia-Pacific region with us now. Thank you.
Welcome, everyone. Thanks for taking the time to be with us today on this panel. I'm Charlotte Yang, reporter with Bloomberg News. And please let me introduce our fantastic panelists today. First, we have Tristan Thompson, head of trading at Optiver. Next, we have Brian Roberts. Brian is Managing Director, Head of Equities Product Development at Hong Kong Stock Exchange. Last but not least, we have Wang, Head of Quantitative Investment at CSOP Asset Management. So we're here today to discuss trading opportunities in Asia-Pacific region. So as I think about this theme, I think there are three topics that are particularly relevant. First, starting with China momentum. I think it was not long ago, back in January, where a lot of people are struggling with the panic selling. And now we're back with Hong Kong stocks market. The benchmark is heading for the 5th consecutive monthly gain. But I think the bigger problem people are thinking is it here to stay? What's different about this rally compared to the previous rally? So we'll discuss with that. And secondly, Hong Kong's role as a connector. We're seeing Hong Kong, the financial hub, playing a bigger role connecting the flow in and out of mainland China, but more importantly, tapping into the opportunities with areas like Saudi Arabia. So what are some tangible progress we could see in that area through the rest of this year? And slowly, I can't wait to hear about the exciting trends in derivatives market and the trading opportunities there. So without further ado, I think first I'll start with the China story. Maybe start with you first, Brian. Is the animal spirit back? And is it sustainable this time?
Yeah. Well, I think we're fairly optimistic that the animal spirit is back. I think when you look at the Hang Seng Index, CSI 300, just in the last couple of months since the beginning of February, these indices are up over 14%. So there's definitely a lot of positive momentum that we may not have seen before. And especially as you've come off the last 3-4 years, which has been generally pretty negative performance. So the rally has been pretty steep. Now, excuse me, the rally's been pretty steep the last couple of months. So this is, I think, one positive thing. The other thing, too, is that international investors are starting to invest back into China. The capital inflows that we see through Stock Connect through the northbound side is the net buying is in excess of 80 billion renminbi just up to the end of May. This is nearly double what we saw through all of last year. So the sentiment amongst international investors is very, very strong to support this rally as well. And the other thing I think we're seeing is there's a lot of policy support for the growth of China, with Hong Kong being that financial gateway. I know we'll talk about it here in a little bit, but the 5 measures that CSRC recently brought out, this is all to strengthen, number one, Hong Kong as a financial center and that gateway for Hong Kong, or that gateway into China, but also to bring that support, that capital that needs to come into the mainland to continue to support this kind of rally and the just allocation of capital. So I think the things that we're seeing right now, I think, are very, very positive, and I think the momentum is there to sustain for a period of time. The last thing I'll just kind of mention is valuations. I think when you look at the U.S. stock market, you look at the S&P 500, you're seeing PE ratios of roughly 25. I think investors are looking at that as being fairly rich in the market. When you look at the CSI 300, MSCI 50 indices, you're seeing PE ratios close to 12, right? So I think there is a big valuation dislocation there, and I think investors are seeing a tremendous amount of value in the Chinese stock into the A shares that, again, is supporting this rally against other markets that may be viewed a bit more expensive.
Could you talk a little bit about what color you're seeing from the ETF flows?
Yeah, sure. So from our side, we're managing a lot of Asia ETFs in Hong Kong Stock Exchange, and also local products as well, like Hang Seng Tech ETF and Hang Seng Index ETF. So based on last several months, I would say we do see some kind of inflows into Asia products. Was to compare with the previous like 2 or 3 years, it's been quite for a while, I would say. And so from client perspective, we do receive quite a lot of queries, like us to describe or give analysis for the China rebounds and this kind of activities. Is that going to continue? Most of the question is coming out from like what capital is driving the rebound, and a lot of analysis showing that it's more driven by the most consensus trade for the year, which would be like long Japan and short China. And for the macro environment change a little bit since March and April and continuously happening these months. So some of the trade has been unwounded, and then which driven quite a lot of inflow back to China names. Very interesting to see a lot of the institution and foreign institutions as well to look at China market again. So during last 2 or 3 years, it's not very performing. Some of them is not allocating too much or keep their positions, but it's very interesting to see that the sentiment is coming back definitely, I would say, and a lot of interest over there. But if the rebound, ask the question whether it's going to continue, it largely depends on whether the data will confirm further. Because there's a lot of policy has been introduced, no matter it's from policy perspective, fundamentals, tradings, exchange. We know a lot of things happened on Asia and Hong Kong. But if that end up with good results from fundamental perspective, then I think the sentiment will be supported by actual flows. Yeah, thanks.
Yeah, I do agree. I feel like the flow this year, a lot of it is driven by people closing the underweight position, while we're still waiting, for that animal spirit, I guess, to be coming from the retail investors, that big flow, going into Asia. And I wonder, Tristan, how has your observations been when it comes to China this year?
Well, I think from our perspective, we've definitely seen the China markets underperform over the last 3-4 years versus many of their peers in the region. But we can definitely see a lot of investors looking for an entry point. And I think there's been quite a few times that we've sort of seen that initial rally before it's pulled back. But hopefully this time there's a few fundamentals backing where it is at the moment. I think the panel's already touched on a few of those things in terms of valuation, in terms of regulatory policy. So we're definitely hopeful. One of the things that we definitely see investors, as I said, I think we've generally seen it, probably the assets have been somewhat pulled out over the last couple of years. And one way to be playing that, we've seen through the derivatives, is to have a bunch of upside exposure. And so that's one way we're seeing investors play it at the moment, is positioning themselves such that should we get a big rally, they're going to gain a lot of exposure on the upside.
Could you elaborate on the different ways how investors could play the upside exposure to China if through derivatives? What are the popular ways? Yeah.
Yes, so the main ones that we've seen at the moment, so we make markets on a lot of products around the world, but trading the key products like HSEI, HSI, HSI Tech, that's where we're really seeing that exposure come through. So we see a lot of interest in sort of 3 to 6 month expirations and through the calls. So that's definitely where we're seeing interest.
Interesting. And also, I think, investing in China, there's something, it's so important to understand, what are the regulatory priorities or how are, officials from mainland China thinking about Hong Kong's role. So I guess this question is for you, Brian. If you could help us decode the CSRC's 5 measures for the Hong Kong stock market, that was announced in April, and what are some tangible progress we could probably see through the rest of this year?
Yeah. Well, again, I think with the CSRC 5 measures, this now really solidifies that Hong Kong is going to be the gateway for China, right? And I think there was 5 measures. I'll talk to 4 of them because they're really directly relating to how the Hong Kong Stock Exchange plays a central role in really facilitating this two-way capital movement. The first one is the inclusion of ETFs into Stock Connect. That happened a couple of years ago, but what we're doing now is we've announced the relaxation of some of the eligibility criteria. And one of the 2 biggest ones that were announced, and this will come into effect here in the next several months, Number one, lowering the assets under management threshold. So this is going to move from 1.7 billion Hong Kong dollars to 550 million. So this is a significant reduction in terms of what ETFs need to have as a minimum AUM to get included. The other thing too is the allocation to Hong Kong stocks. This was, or currently is until the new rules go into place, has to have a 90% allocation to Hong Kong stocks. This is being reduced down to 60%. Now, what that means is, on the reverse of that, is 40% can be held in other types of securities. It can be commodities, international stocks, fixed income. So it's going to allow index providers, ETF issuers to be able to innovate, and we're seeing a lot of positive energy around that to be able to bring out new ETFs that are going to be to meet mainland demand. You know, providing still some of that kind of China-Hong Kong base exposure, but then diversifying that with other kinds of international or other kind of securities. So that's the first measure. The second one that was announced was the inclusion of REITs, or the support for the inclusion of REITs in Stock Connect. Now, this one still, details are still to kind of be worked out, and the date will be kind of determined a little bit later on. But this, I think, is very important. You know, I think number one, being able to provide international investors access into China's property market. I think this will be important for the stability of China's property market, and also just getting access to a wider lens of securities, but also Hong Kong's REITs as well. I will say this has probably been one area that has been underdeveloped. We haven't seen, you know, liquidity form as much as we've seen in other kind of markets in Asia, in particular Singapore. But I think this here, when you now have your REITs being accessible to mainland investors, I think it's going to make it very, very interesting for our REIT market to not only gain liquidity, but also grow as well, with, you know, potentially listings migrating over to Hong Kong. The other ones that were also talked about around these kind of measures was the inclusion of the renminbi dual counters included in Stock Connect. I think this is going to be another important one. We've been making a lot of announcements, a lot of progress around this kind of migration into that. But every time I go into mainland, everybody is just always asking, when are we going to be able to trade the Hong Kong stocks in renminbi? And I think this will be really kind of transformative for our market to be able to do that and provide those kind of exposures. The last one here, and certainly not the least, is the one around encouraging more of the leading mainland companies to IPO and do their listings here in Hong Kong. And I think this here is really going to be fundamentally important. I think it's a directional policy shift, regulatory shift, that is sending the signals to mainland companies about when you're going to raise capital in the international markets, the place to do that is in Hong Kong. It's not the other markets, it is Hong Kong. So these are the four measures for us that we're obviously playing an instrumental part in, and I think it's going to continue to re-cement and solidify Hong Kong's position as that gateway into the China market.
So on to the last point, can you tell us audiences like what kind of mainland companies are currently in the IPO pipeline? So anything to look forward to?
Well, I think there's going to be a lot to look forward to. I mean, but from a regulatory perspective, we can't really comment on any company filings and different things along those lines. But so I do think there will be, you know, there is a very active pipeline on that. I think we will start to see more and more of these companies starting to IPO. And also, I think it's not even just those new companies IPOing, it's the transition of certain secondary listed companies that are here that are also listed in the US, them migrating back to Hong Kong and having a primary listing here as well.
Yeah, the market's focus definitely on when Alibaba is going to complete that dual primary listing thing, but I'm not going to press you on that. So now, another thing I think has been talked a lot is about, you know, this bigger role Hong Kong is playing in connecting with Saudi Arabia. And I know that CSOP has launched, I think it was the largest Saudi Arabia ETF back in November. So how has the flow been like, and what's the cross-listing progress? If you could talk us a little bit on that.
Yeah, sure. I think China-Saudi has been a very hot topic right now, and especially for the current geographic situations. So We launched the ETF being the world largest right now, and over $1 billion USD AUM, which was a very successful launch. And we do see some inflows. Compared with the fund size, probably not that big, but actually it's quite meaningful step for the ETF to be listed here. And also we're preparing for the, for example, the cross-listing program back to China, which is already public information, I think. And which is very big, I think, especially for onshore investors. Because for this year, we do see quite a lot of demand for foreign assets for different like US ETF, Japan ETF, onshore China, trading at premium and so forth. Middle East, I would say, is not only for Hong Kong, China. I think we do see quite a lot of interest from US, European. They are looking for new investment theme and new areas. GCC area is definitely a very interesting market to look into. I need to say a lot of like investment has been done and a lot of changes is ongoing, especially for their Vision 2030. However, from investor perspective, I think there's a lot of research, analysis, and also the educations we need to do, because not everyone knows largest shares or how many listed companies within Saudi, within GCC, and what's the program, what the impact is that going to be related to oil, and a lot of questions we saw when we're doing the roadshows and the education sessions with the clients. But once the client get familiar with the investment target, probably I think there's a very bright future for this kind of GCC product. Yeah.
And Brian, I know that the HKEX has worked really hard in this aspect, and I guess if you could broaden it a little bit and maybe just share with us how, what are we thinking in terms of what kind of connectivity we want to bring, and also how can investors capitalize on that kind of opportunity?
Yeah. I know I'm probably going to sound like a little bit of a broken record. I keep saying it. We're a connector, we're a gateway into China. But also, I think we're playing a very important role in being that connector, that gateway of capital into and out of the Middle East. I do want to touch on one point with the ETF that was listed here with CSOP. That ETF could have been listed anywhere in the world, right? But it was strategically placed here with the support of Saudi as well, to put the largest Saudi Arabia equity ETF in Hong Kong. And I think that right there symbolizes the importance Hong Kong plays in being able to facilitate capital flow, and also the role that they view that it can play to facilitate that flow into into the Middle East as well. Now, we've had a lot of discussions. We've signed an MOU with the Saudi exchange to do product collaborations such as this. I think this ETF right now is really the initial kind of foray into all of that. And as Saudi, continues to open up their markets and diversify their economy, they need capital, right? And for them to do that, putting these products, whether or not it's going to be derivatives down the road, but starting with the ETF, this is going to allow investors, which in this region and globally speaking, to be able to actually get exposures into the Saudi market very, very efficiently. There's a lot of, similarities to Saudi with China, right? The first thing is foreign investors have to have QFII quotas to get into there, right? Well, by having an ETF placed here in Asia, now investors can actually do that and not have to worry about the QFII, the quota systems, and things like that. So again, it's about easing the access and being able to bring capital into Saudi. Now, we've also, we are having discussions with them on potentially derivative collaborations to be able to kind of support their development. And the other thing that I'll just kind of mention is that we have recognized them as a jurisdiction for listing. So their companies now can have an easier path to doing secondary listings here in Hong Kong. So again, we want to continue to be that kind of that gateway to facilitate capital flow and bringing some of the Saudi companies here into Asia through Hong Kong. and continue to support them.
Now maybe we can zoom out a little bit to look at the broader APAC region. So Tristan, I want to ask you, what are the trading opportunity you're seeing in this region this year so far?
Yeah, maybe first I'll pick up on one just here from the panel, but we're super excited about one of the CSRC's basic eligibility criteria there with the ETFs. We really feel if there's broader access to the ETFs, that's going to be really huge for Asia Pacific. So increasing that eligibility is big. Then two, having a more diversified ETF offering over time. And I think that's what's been really exciting with CSOP, that we've been diversifying the offering. It's not just Hong Kong and China, but it's also about what are the key kind of themes or what are the key global products that we can access through these ETFs. I think that's another big piece there. And then three, I'd say is really important, is probably like them bringing all the institutional access. So things like block trade facilities, things like creation redemption. If we make these seamless with our market structure, I think it's going to be really seamless. It's going to be very conducive to really growing our ETF market, which I think is going to be a huge opportunity. The second opportunity, I think, in the region at the moment is the single stock options. So if we look at the US, there's just a huge interest in SSOs, and single stock options have been growing a lot, particularly since 2019. But when we look at Asia Pacific, I think it's a relatively underdeveloped space. So Hong Kong is probably the leader in the region, or is the leader in the region. But if we look to places like Japan, Korea, very limited listings in the SSO space. So that's an area that we definitely want to focus on growing, and then giving investors opportunity to invest through SSOs.
So to some of the audience who's not very familiar with single stock options, could you talk a little bit about, for example, why has, I guess, in Japan and Korea that hasn't been so developed? Are there any hurdles there, or what is the direction that you're thinking of developing in that regard?
Yeah, I think if you go market by market, there's often market structure issues in each of these that you need to solve. So I don't think it's a single big bang kind of tick that will get it going. So I think each, our approach with each of the individual exchanges is to kind of put what we see forward, but also we go out and get a broader institutional, forum together to talk about what they need. So that's kind of the key thing, bringing the right investors to the table so they can grow the asset class. We think it's really powerful to be using SSOs for being able to basically manage the risk of your portfolio, to be able to express kind of views around those individual names. There's a lot of really interesting stocks globally that you want to get exposure to, and you can do that through your single stock options. And then, just managing, if you have a large portfolio of stocks, derivatives is a great way to also think about how you might want to harvest some extra premium.
I see. And another thing I think comes up a lot in conversations is because zero-day options has been so popular in the US, but when can we see it coming? I mean, in this region, if there's anything you could share on that.
Yes. So zero-day options, obviously probably similar around 2019, has really taken off in the US. So I think if you look at the CBOE product, it's kind of one of the key products globally. They're now doing about 50%, about half of their volume goes through their zero-day option. So it's massive. And it's been a huge trend towards trading shorter dated options. So I think for Asia Pacific, we've definitely seen that trend continue as well. So we're seeing more weekly options getting listed in Hong Kong, in Korea, Japan. So that theme's continuing. And then probably the most exciting one coming up in the region is, obviously we've got the single stock weekly options coming up in the second half for Hong Kong.
Brian, do you want to share something about that?
Well, yeah, I echo what Tristan said. There's just been this mega trend towards, shorter dated options, and it's for a variety of different reasons. And we've been following that, right? Our standard kind of monthly options, these are trading at an all-time high when it comes to volume. We're trading over 640,000 contracts a day. We're one of the leaders in this region in terms of having a very vibrant, diversified, liquid single stock option market, and we're going to continue to kind of iterate on that. We started this journey, several years ago when we launched weekly index options on our HSI, HSCEI. Those have done really well, especially on the Hang Seng product as well, because with Hang Seng, the HSI index, it's a bigger velocity product. It also has a bigger retail participation. And now when you look at weekly options as a percentage of our total HSI index options, it's roughly 35% is being traded on the weeklies. So what we're going to be doing this year, again, it's all subject to market readiness and final regulatory approvals, launching weekly index options on HS Tech. So that one should be coming out here in the next several months. We'll be making some announcements, hopefully towards the end of this month, early next month on that. And then, like Tristan mentioned, we'll be introducing weekly stock options as well towards the end of Q3, early Q4. We'll start with 10 stocks. We've already made the announcement of which 10 that will be. Again, I think this is something where the dynamics, the ecosystem is ready for this, and I think we're very, very excited about that. The last kind of point around, do we go further from weekly and do we go into zero-dated options? We want to get these products out there. We want to see how these things kind of develop and mature. But it is definitely on our radar to start looking at zero-dated options on the indexing side, on the index product side.
Yeah, just following on the weekly stock options. So when would it be, what are the metrics you would use to see, oh, now we can broaden the scope a little bit? Or can you tell us a little bit more about, those 10 stocks that could be coming?
Yeah, I mean, I think, for us, it's been kind of waiting to get some of the dynamics ready. I think number one, I think our market is vibrant, it's liquid, we can do this. Also just kind of making sure that retail understands kind of the weekly kind of option space. And when you get into single stocks, there's going to be a lot more volatility behind that. So it's been kind of somewhat of a premeditated plan. You start with the index options, get them familiar with how these products kind of operate, and then we can continue to kind of roll out the single stocks. And we're at that point now, I think, where the retail market in particular has reached a level of maturity that now we can bring out those products. And then we'll start, with Tencent, some of the more kind of, all the stocks are within the top 15, top 20 most traded that will be launching the first 10 on the weekly stock option side.
I see. And another thing on the ETF side, I think that's really exciting about Hong Kong is the crypto ETFs. So I know that CSOP hasn't really put forward such products yet, but I just wanted to know how how CSOP is thinking on that topic as well.
Yeah, sure. I think it has been a very hot topic recently, and not only in Hong Kong, but in US as well. So we launched the future-based Bitcoin future and the Ethereum future ETF in Hong Kong the year before last year, just after the announcement from Hong Kong government and also SFC. For recent physical one, I think, yeah, there's a lot of constraints in terms of the participants. So, for example, in Hong Kong, we have not too many licensed exchange. So first question from an investment perspective is how to manage the liquidity and make sure the order can be done and also smoothly. And also there's a lot of infrastructure things we need to consider, not only about the fund setup thing, but compared with the US, for example, they using obviously a lot of funds using a Coinbase, and they are not largest, but to be honest, they are relatively big. Tier 1 still Binance and HKEX and so forth. So we will continue monitoring what happens and see whether the infrastructure or the ecosystem within Hong Kong is getting better, probably. And also our partners probably will have more prudent approach on the crypto-related products. But glad to see that a lot of product has been launched within Hong Kong. And recently, I think there's some turnarounds, not only in Hong Kong, I think in US as well. From the global sentiment, I think it's quieting down a little bit. Seems like the US approving Ethereum is still on the question. Approving the new Rules Act is still on the question. Ethereum has been approved, sorry. So which means the further trends or the I would say that based on the conversation we have had with the investor, yes, there's a lot of people looking at this investment as an alternative, and they've never been investing into this kind of asset before. So there's still a lot of educations and preparations you need to do, because definitely this is a complex product. It's not very easy to distribute around traditional distribution channel, which is the same as when we launched our very popular, like within Hong Kong Stock Exchange, leverage and the inverse product. It takes 1 year or 2 to let all the distribution channels to get ready. For example, the client need to do the knowledge test and prove that they can trade this kind of complex product and so forth. So it's a step-by-step thing, I think. And ultimately, I think it has been approved as a class within global market already. Yeah, I think that's our view. Yeah.
Yeah, on the, sorry, Brian, did you have something to add, or?
Yeah, I mean, just on this, I think it's an important development that we have these spot Bitcoin and Ether ETFs, and I think it's important for, you know, more jurisdictions to bring out these products, because it's you know, this evolution for, you know, cryptocurrency. This is an important development, right? Because this is really bridging kind of decentralized finance with traditional finance, and really kind of bringing the decentralized finance into more of the mainstream, and also getting regulated. I think this is important for, I think, this segment of the market to grow. You know, and like you mentioned, like this kind of, the development on these products here in Hong Kong are very, very similar to levered and inverse products. It took probably 12, 18 months to get everything kind of worked out. But now, you know, levered and inverse products, they account for about 20% of our ETF turnover on a given day. They trade about $2.5, $3 billion a day, and they account for about 10% of our assets under management. So once everything got worked out in the ecosystem, it was a really pretty big growth trajectory for us. And I think these ETFs are going to follow the same type of thing, because it has a lot of the same similarities that need to get worked out, from market structure, distribution, suitability, things along those lines. But, you know, we're optimistic around where these products can go and what they can provide investors in this region.
On the levered and inverse products, actually, I think Hong Kong retail investors really love the Hang Seng Index ones, Hang Seng Tag and Hang Seng Index, because I recently wrote a story about it, how I think that it flows into those inverse products is actually, for this quarter, is actually the biggest since Q4 2022, right, I think?
Yeah, I think that's a very interesting pattern we observed in Hong Kong. So when the index getting better, then obviously we're going to see, it's not obvious, at the very beginning, we saw very big inflows into inverse product. Not necessarily means that people will short, yeah, they are shorting the market actually. Yeah, so it means that they normally go in different direction of the market trends when they trade the leverage and the inverse. Because leverage inverse product tends to be trading tools, not necessarily you can hold for long term if it's a zero interest environment, but given current high interest rate environment, there are definitely a funding cost embedded in the product. But people still very actively using this tool, betting on next day or very short term trends or rallies or like a negative outlook and so forth. So the trading activities for our leverage and the inverse pairs, especially for the Hang Seng Tech one, has become kind of an indicator right now. A lot of people using that for their trading strategies, and also realize their trading strategies. It's not only happened to Hang Seng Tech, I think it also happened to our Nasdaq and Hang Seng Index. And you will see from our product, surprisingly, you will see our largest Nasdaq pair is inverse pair. So Hong Kong investor tends to go against the general market trends quite significantly. So which for me is a very good news, to be honest. As a manager, so I don't necessarily need to go in line with the market. Yeah, which means I'm going to be questioned, oh, you follow the trend, a lot of buying orders, I put in another big chunk of buying orders on top of that. No, not necessarily. If everybody buying, I'm generally going short. So it should make my trade much easier. Yeah.
Yeah, and also I heard like some retail investors, they would exit like those leverage products and go into the inverse with like the same day. Yeah. So I guess it's more of a trading strategy rather than you're taking a bearish view over market. So as we have a few minutes left until we finish this panel, if any one of you have any questions to ask or just any comments or views you want to share, given where you are standing in this market, where you are observing, you know, the stories in this region, please raise your hand and we'll have someone to pass the mic to you. So while maybe we give the audience a bit time to think, maybe I'll just ask one last question, like what are you most excited about through this year, or what are you most expected to see to happen? Maybe we can start with Tristan.
I mean, for me, probably the most exciting theme of this year is just the year of elections, I think, for us. So I think that's going to bring a lot of opportunity in the markets. So I think it's 50% of the world's population in election this year. So yeah, I think that's one of the standouts for us, just looking into those events and thinking about how we can price those and provide liquidity at all times.
Yeah, I mean, I think the elections are going to make it interesting. Someone was saying the other day, I was talking with them, I think there's like 100 different countries this year that are holding elections. I mean, there's like an election every 3 days, basically this year, and we're going through one right now that I think is, quite surprising, the outcome in India and things along those lines. And we'll see what kind of happens with upcoming elections and all of that, especially in the U.S. towards the end of the year. So I think the elections are going to keep it interesting. Also, I mean, obviously, I think we're excited and optimistic on what's happening in China, and I think we've talked a lot about that. But again, I think this one feels different. This one, I think, is supported with, the right fundamentals. I think we need to start seeing a bit more of the economic data to make sure it's sustained. The flows are going back into China, and it's pretty diversified that way. So again, I think we're pretty optimistic that this, performance or this kind of trend to go back into China. And you never know what happened in India. That might also have a reversal on the conviction of India, because India in the past 6 to 9 months has been a big beneficiary of the China downturn. Now with kind of the uncertainty there, will people start to reallocate capital back into China, especially with this market performance? I think there's a lot of things there, and I think we're just optimistic about that.
What about you, Yi?
Yeah, definitely, I would say China rebound. So it's not necessarily talking about like whether the trend continue fundamental and so forth. So always, when we talk to clients, the investment decision is always like relative basis. So if I talk about like last year end, then people have consensus on Japan. So everybody is saying, oh, I'm gonna long Japan. So that's the reason why YTD Japan is accumulating the largest inflow. And until now, things getting changed. The macro outlook, CPI, so forth, getting correction. So China macro figures getting changed. So people will think about whether the strategy is still valid or not. Not necessarily is how deep or how the performance being so bad during last several years. Doesn't mean that the money gonna come back. But if other market is not performing and the China market is performing, then that's the timing to test whether China's or the Chinese stocks is still attractive to the global investors. So far, we see relatively good starting, but ongoing for the year, I think, as mentioned, geographic like tensions, elections has been putting a lot of volatilities right now, especially for US. I think the week before last week, we see VIX is historically low. It's very low, actually. So we start to worry about whether those event-driven things can bring some like flows and volatilities back to the market again. That's probably which is going to be a good news for Chinese market as well. So at least it's a safe margin. It's good enough for the investors to put some bets on. Yeah. Thanks.
Yeah, so definitely a lot of things to watch, for the China market. I think where's the election, also where's the data, but also I do feel like, unless you have that valuation protection, as we started this conversation with. So if if any one of you don't have oh, we actually have a question over there, yeah.
Thank you for your great presentation and discussion. My name is Yaxi, and I'm a writer from China. So my business is mainly in Saudi Arabia. So my question is, I just pay attention to the capital summits held in Hong Kong and Riyadh this year. So my question is, how do Hong Kong and Saudi Arabia cooperate? I mean, the future. Can you share us some insights about the progress and future? Thank you. Of the cooperation between Hong Kong and Saudi Arabia, the details.
I think that question's for you, Brian.
Well, I think I kind of addressed some of the things, right? I think, one, the collaboration with Saudi on the ETF that listed here, the world's largest Saudi Arabia ETF. There's, possible reciprocal things occurring where we could look to cross-list or list ETFs into Saudi Arabia. So I think that is another thing to continue those kind of developments. Again, talked about potentially doing things on the derivative side, and then also recognizing Saudi as a regulated listing environment. So again, hopefully with that, we can start to facilitate more secondary listings of Saudi companies here in Hong Kong.
So with the time we have to conclude the panel discussion. I want to say thank you so much for spending the time with us on this panel, and thank you to our wonderful panelists for the discussion we had.